first rates then. Reliance starts off a little mild, just about 0.3% on the screens, 88.89 for the Nifty. It's a very mild start, I must admit. I want to quickly check in on what's weighing heavy on the index as opposed to what's holding out, and I'm sure it's Bharti which should be leading even right now as I see on my screens. L&T holding up 0.7%. There's Airtel still going strong, 605 is where the stock is. DRL, Cipla, L&T, HDFC, Bajaj Finance starts off with a move of less than 1%. So I have to say that this is a very muted reaction to even good earnings by the market. While Bajaj Finance is surely leading, it's less than 2% higher right now. Could have done a little bit better considering they've, outdone in terms of their earnings as well as the commentary as well, given the kind of environment that we are in. UltraTech ahead of its numbers is holding strong by about 1.5%. HDFC Bank makes a comeback of about 1.25%. L&T is also holding out. I just want to see what some of the liquid universe movers are up to. There's Tata Power, Equitas, Adani Power, IGL and Idea, which are actually holding out. So it's a very lukewarm, placid kind of start, Nikunj. Not all that impressive. We're not even aligning with SGX Nifty.
See, Reliance is at 1400. It was at 1450, 1460, I think, at the beginning of the week. So Reliance has come off quite a bit from its 52-week high and in this week. So that is something which is worth mentioning. And for a change, it's not banks which are having impact on the market. In terms of volume, if I have to really look at my screen, I think it's UPL. Maybe it's a combination of short covering there, which is clearly visible. PVR, Lanox moved yesterday, PVR moved yesterday. Today they are coming down again. It's not a bad start, Aisha, frankly, because ITC is looking okay, UPL is looking okay, Apollo Tyre is not reacting to bad set of numbers. But the question is that when heart of the market, which is the banking space and the financial space, if that is not ticking, how strong can the markets go? I mean, imagine if Apple, Google, Apple, Alphabet, Netflix and Amazon do not perform, what will happen to S&P and what will happen to NASDAQ and Dow? So it's for those, for global, for US markets, the 4-5 large mega tech caps, I think, are firing full cylinders in the new normal, so to speak, because they are in a good spot. They are digital, they give you solutions. That's not the case for Indian banks, because Indian banks are on the other side of the fence where economy is contracting, will contract, will continue to suffer, and that's a leverage play which will continue to suffer. I think that's very simple. I mean, if you're a global investor, which way would you lean? If you have a choice, go with developed markets where the heavyweights are all aligned to the new normal, or go with Indian financials where we know that in the short term there's going to be pain, there is going to be grind, there's going to be churn, and there is going to be volatility.